Well, we are going to take a look at your grain market activity here in just a moment, and we're going to bring in a little expert help as well. We have Dewey Strickler standing on the line, and he is with I'm sorry, Dewey, you're in Franklin, Kentucky, and I'm just drawing a blank here today because of stuff I wanted to bring up here today. Dewey is with AgWatch Market Advisors, and Dewey, thanks for joining us here today. I just emailed you some photos that I took as I was leaving Friday after work. I was driving through Kentucky, and I went through your area there. And there was one field in particular that caught my eye, and I wanted to get your thoughts on this. I believe we have some pictures I took out there in the field, and it was of a wheat field. It looked tremendous. And there we go. And it was right along the edge of the road, and took a closer look, and you'll see that some of the wheat is actually already heading out. I was just shocked to see that. There's a close-up view of it there. And so that means, of course, we had a freeze event went through here just a couple of weeks ago. That means that wheat was pretty far along at that time. Now, even though this field looks tremendous, is there still a potential that maybe those heads that are going to emerge might be sterile inside? What do you think about that?
I think there's a very good chance that they could be sterile because a couple of weeks ago, those, like you said, those heads were still in the stem, but we had, of course, quite a bit of a freeze. Temperatures were down into the low 20s and also in the upper teens. So I wouldn't be surprised if we're not going to be looking at some of those, quite a few of those heads, like you said, will be sterile because of the freeze. We'll just have to get a little further along the development, see if there's any kernels in those heads.
Is that pretty typical for the stage of development in the wheat in that part of the country there or not? Or is that a little further than normal?
Way further along than normal.
All right. Let's take a look here at our early prices. I want to get your thoughts on the opening of trade today here. Now, we hit a firmer tone overnight in the corn and soybean market. Right now on the corn, we're trading 2 1/4 higher. On the May, we're at 361 3/4. That's on the high of the morning range. And December now 1 3/4 higher at 386 1/4, just one tick from our high of the opening range. We did have a corn sale reported overnight. A little over 100,000 tons were actually reported sold by USDA this morning. The destination was unknown delivery, but it went for the current marketing year. So that didn't hurt matters either. Now, if we look at our soybean open this morning, the soybeans were about a nickel higher overnight. Right now, the May contract is up 3 3/4 at 9.45. And 3/4 in November now 3 1/2 higher at 9.53. The wheat trade on the Chicago May, we are now just a 1/2 cent higher at 4.24 1/2. And in the Kansas City market, we have the May contract down a 1/2 at 4.21 1/4. What do you expect to happen here in this grain trade this week? We have the big report coming out tomorrow, the WASDE report, that'll be out at 11 o'clock Central Time. And then it's just, I guess, wide open planting season after that if the farmers can get in the field. What's going to drive the market?
I'm glad you asked that. There's one thing I looked at here in the Commitment of Traders report on Friday. Of course, it does show that the funds, the trend-following funds, are short 690 million bushels. But my mouth just dropped open when I looked to see what the index funds were doing, Marlon. They're long 1.4 billion bushels of corn. Now, that sounds like a lot of corn, but it's not. It's the smallest position that they've had on since June of 2009.
Really?
And if you recall, back in June of 2009, corn was at $3, and we rallied about $5 up to about $8.40. Do I look for that to happen this year? No, I don't look for that to be. But the thing of it is, anything goes wrong here with this crop. These funds, traders, large institutional traders will start coming in buying ETFs, buying the indexes and so forth, and this could be where you finally start getting some strength in corn coming from, would be these index funds. Normally I don't look at them a great deal, but you need to keep your eye on them here occasionally.
Well, I'm glad you brought that up, Dewey. Good information. Sit tight. I'll bring you back here in a moment. We'll talk a little about our livestock trade as well. Dewey Strickler is with us of AgWatch Market Advisors in Franklin, Kentucky. Don't go anywhere. We'll be right back. There's a look at our Dow Jones Industrial Average. It's opening up a little firmer this morning, up about 53 points as we get started on the trading day in New York. Also, the value of the U.S. dollar index had been kind of treading water here. It was just a little bit firmer when I came into work, and then it went a little bit lower. We can take a look at that as well. So let's bring up that U.S. dollar index on the big board. Currently on our June futures here, we have it now trading 120 points lower, so it's on the minus side, but it's still above 101 at 101.050. Now it's at 101.010, so down 150 points at the present time. Deferreds are actually a little firmer though. And the crude oil, I wanted to bring that up too. On the crude, we have the May crude oil in West Texas crude about 44 cents higher yet at 52.68, so more firmness in the energy market this morning. Let's bring back Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and talk about how we're opening things up here in the livestock trade. Dewey, let's take a look at our opening trades on the live cattle board, and I want to get your thoughts on how the market's acting. We had two strong days to finish last week, and right now on the live cattle board here we go again, follow through buying, and boy, it's pretty extensive too. June live cattle, Dewey, up $1.73 at 113.53, just within a dime of our high of the opening range. August up 147 on the feeder cattle side. Right now we have our May contract up $1.97 at 135.85. August up $1.80 at 137.45. What's happening here, Dewey? The fundamentals didn't seem to really indicate that. We had lower cash cattle trade Friday.
Well, that's true. I think there's some anticipation here, the weather finally warming up here, Marlin, and we're going to see, improvement in, some demand here and so forth. And also, too, there's talk that China may ease some restrictions here on meat imports. So I think, that was in the market last week. I think it's given a little bit of a boost, but Friday when you had the feeder cattle, they went up and set a new high for the move here, and you've got, of course, some good buying in here past couple of days in the June contract of cattle, and just looks like the specs have control of the ball right now.
All right, we're looking at a chart on June live cattle right now. You can tell that it's up there in that neighborhood of recent highs. If it would manage to keep going higher here for a little bit, does that mean a new leg higher in your opinion?
I think we've already started that leg up here, Marlin. I think we're going to be looking at June contracts of cattle going up into about the 116 or maybe 117 mark. You do? Okay. So what about the spreads between the April and the August contracts there? They used to run about $14.50, I believe. We were talking about that at one time, and I believe they're down to around $12 now. So what do you think about that? Will they continue to contract a little bit, do you think, or not? Well, they may do that here. You look at April, it's the spot month, and that's going to reflect the cash more than anything else. Your funds, they're going to be involved in the June contract, and as we know, the funds typically don't pay much attention to what the spreads and what the fundamentals are. On the lean hog trade, we closed weaker on Friday, and we're seeing a little bit more weakness, not much. May lean hogs down 28 at 68.72. June down 20 at 72.55 this morning. Do you think that's about it for the bearish selling here on the hogs? Well, been looking for hogs to have a rebound here, Marlin. I don't know that this low here in the June contract at 71.72 is going to hold. We might get just a little bit below it, but I think eventually we're going to be looking for a rebound back up into about the 75 and a half level. Awesome. Dewey, thank you so much for the information. Good to visit with you again. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And we're off and running, Janet, and the markets are trading.
Another Monday underway.
You bet. Full
Thanks,
week.
Mark.
Going to be a busy week.